We're going to get cracking in a moment, but before we do, this is an important announcement. The information contained in this podcast is general in nature and does not take into account your personal situation. We don't guarantee the quality of the wine or the banter contained in this content. You should consider whether the information is appropriate for your needs and your daily intake. And where appropriate, seek professional advice from a financial advisor, accountant, bottle shop assistant, or relevant qualified professional. Matters referred to in this podcast are of general nature only, and for those of drinking age, and should not be relied upon in place of appropriate personal advice or the odd glass of wine on a Friday.
To make sure you get the most out of wealth, wine and wisdom, folks, please follow the house rules. Don't be a wallflower, get involved in the chat. We love to have some questions, feedback, and a little bit of commentary along the way. You give us energy, we'll have a good time. Make sure you pour yourself a glass of something wet to wet the whistle. Make sure you get the banter flowing as well. Doesn't matter what you're drinking, whether it's wine, our favourite, beer, coffee, maybe it's a cup of tea, water, or even juice. Keep that good energy flowing, folks. There's some house rules. If you don't put your name down, we don't know who you are, you're not coming in. Don't spam or advertise. This is our little game of cricket. This is all about debriefing the week, folks. What's going on out there in the world, and hopefully get you some sanity, maybe a bit of a chuckle at the end of the week, so we can all be on the same page and keep moving forward. Make sure you respect your fellow patrons, because we don't let any old muck in this place. And most of all, have some fun and enjoy this episode of Wealth, Wine and Wisdom. Fenton.
I love that intro. Dollar. It gets me. I know it's only been twice, but it's gotten me every time.
It's me every time. Mate, how are you? Good to see you.
I'm good, but I've got to knock the top off this one.
Hey.
There we go. Another beautiful bottle by getting rather used to the good stuff, mate, from Levington Hills.
Levington Hills, mate.
Our
sponsor for the moment. Hey, Jeanette, how are you? Good to see a bunch of you on right now. Give us a bit of a shout out. Say hello. Let us know what's going on for you. Tell us what's your drink of choice this afternoon, maybe. Say a quick hello wherever you are, whatever you're up to. Good to see everyone.
So where are you from? What's your choice of poison? What's in your sippy cup for today? And any questions that you've got. I'm really curious to hear what's on everyone's mind. We've taken a little bit of a guess today and come up with a few things. There's the elephant in the room, and we love to talk about the elephant. So we'll certainly be doing a little bit of the white elephant stall today. No doubt it's on Jason's roll, but it's definitely on mine. But if you've got anything on your mind, let us know what it is. Whack it in the chat so we can figure out what questions you've got. I'm assuming, Jeanette, that's more of a comment than a question. Oh, no, that was what she was drinking.
Poker Beach and having a coffee, Fenton. Well, hopefully it was an Irish coffee with a bit of a whiskey. But anyway, whatever your drink is, good to have you here on the show tonight. Fenton, we might do the intros. Andy Fenton, extraordinaire, banking and finance, 20 years. And myself in the world of real estate, property, and all things, around that part of the economic spectrum that we're involved in. We started this Wealth, Wine and Wisdom a little while ago, 3 years ago now. We're sort of many episodes in about helping our respective communities, property, business and finance communities. And it stuck with us. So we're happy to have a glass of wine, chew the fat, talk about the week that was. And thank you for joining us. Good to see a few of you on right now. Rosé for Alison and coffee for Jeanette. Whatever your drop is, then there you go. In a fancy glass. Well, again, Fenton, I'm trying to impress you. I'm using the fancy glasses that you've given me. So, good to see. Good to see.
When in doubt, it's Riedel like needle, mate. That's what you want. And I'm very happy that you're drinking a good wine from a good glass. So, mate, I reckon we crack into it. What's I've got a funny feeling you've got some good stuff over your neck of the woods. So how's
Well,
about we get into
what happened this week, Fenton? The RBA said, "Look, listen, time to put the interest rates up again when it comes to inflation and all that malarkey." At the end of the day, we've been talking about this for a while, Andy, and I know you might have something to show the folks a little bit later on, but we like to pay attention to the aggregated. Let's call this the aggregated opinion of many experts rather than $2 experts. And let's have a look at maybe this might even qualify for as a $2 expert, maybe a $2 billion not expert. But anyway,
well, mate, let's rip into the intro because for those of you who are just getting familiar with the new format, we've got Decant the Week, which is gives you time to aerate that wine or some of that garbage that's being spilled around by our amazing journalists. We've got the perfect pairing, which is problem and solution, and that's what we hear about. And then the number one menace, which always tends to come into one of three categories with us. But we'd love to know who you reckon the number one menace is for this week. But as we get into it, we're going to start to decant the week, Mr. Witten.
All right. Well, what's on the agenda this week, Andy? Well, I'll start with some good news. Well, I think some good news for investors anyway when it comes to. Let's put us like this. And
good news. That doesn't make the news, Jace.
Well, good news anyway. We did talk a little bit about this not so long ago. I had a chat with my crew, my property investing mad crew, earlier this week about the idea that, there's a lot going on when it comes to the property market. And one thing that we need to pay attention to right now, and I mentioned it last week, but the quantification I did previous was a little bit off, Andy. I was looking at the numbers of maybe 15 to 20,000 students entering the marketplace. But hang on, folks. There's actually closer to 50,000 students set to return to university campuses in Australia. Andy, folks, 50,000 students within the next 4 weeks. Can you see that bit underneath it? The next 4 weeks.
4 weeks.
4 weeks.
We're going to have a lot of planes on the tarmac at Melbourne Airport and Sydney Airport, aren't we?
Well, there's going to be some pretty interesting times ahead on that one. So, you said it, Andy. Right now, where are they going to go? The predominant places and locations they do enter, as a majority. Melbourne and Sydney are the places where the students, it's probably a good 50 to 60% of the students will arrive. And then a smattering, around the rest of the country. Brizzy gets a bit of action, but really at the end of the day, the east coast of Australia is going to get 50,000 students.
50,000. That's all. That's more people. That's actually more people than moved from Melbourne to Brisbane in the middle of the pandemic by
over 3 years. But do the math, folks, and we see these numbers and we're like, oh yeah, 50,000 students. I'm telling you, this is like crazy. And even if it's only 30,000, this could be an exaggeration. You never know. This is the newspaper reporting a number. But folks, I'm telling you right now, don't miss this one, right? 50,000, like Andy said, in 4 weeks across the country, where over 3 years there was 35,000 migrants or migrants. Is it migration? 35,000 internal state migration between, the states, and the majority of those ended up in Queensland, folks. So imagine that again in 4 weeks, not 3 years. And what is that going to do to the supply chain? I'm telling you, we've seen nothing yet. And here's another one.
That's a 1% That's a 1% population increase of Melbourne, which is probably more like a 3 to 4%, if not maybe 4 to 9% on dwelling. Because if we factor in the consideration that most houses in Melbourne have 2 to 3 people living in them, So a 1% increase, that's a minimum of 3 to 4% as far as the accommodation that's going to be needed for them.
Oh, I tell you what, when we think of these numbers and we kind of gloss over them, really just think about where and what and how, and so rents have surged. We've talked about this, records everywhere, record breaking paces. But what is happening right now, Andy, team folks, look out that is the rents are outpacing property or house rent growth. And that will continue to go for two reasons. One, lots of apartments in those city locations where students are returning to. I think that's going to accelerate those rents higher and higher. And number two, the house rents have accelerated far out and beyond the apartment rents, and people just cannot afford to rent a house, Andy. Like, that's just not happening. And away you go. We've got a client who just settled a property up in Brisbane. They had a rent that they thought they were going to get was $800. It was a 3-bedroom apartment in Newstead, and they've actually just got $1,300. $1,300. Yeah, there we go. So
that's pretty significant.
Well, I mean, considering the rent hasn't gone up for 11 years on average in those marketplaces, then all of a sudden it's going up 30 or 40%. What's going on? You and I both know, Andy, that what's going on has to do with interest rates, right? We're talking about that. We'll dive into the interest rates in a moment. But in my property world market, these things are probably something, behind the scenes, I think everyone should pay attention to. Yeah. And who's winning when it comes to population movements? Where if we have a bit of a look, Queensland, bit of a winner in Queensland. Victoria, South Australia, Western Australia, kind of in there as well. But really, at the end of the day, big winners. I think Victoria will catch up pretty significantly when it comes to the students coming back to the marketplace, Andy. And I think that's one to watch for me. I think that's big. I think
somebody's got to get educated, and it's generally not Australians, right?
Wow.
It's just joking. We're a smart bunch.
Well, at the end of the day, it's an attractive place to be a student, Australia. And we did lose our crown, actually. We were up in the top 3, and, Canada and other places kind of got started a bit earlier, but I'm sure we'll come back strong. But, other than the interest rates, Andy, which are probably front and center of people's mind in Decant the Week this week, I've got a few other things for later on with the perfect pairing. But, I might throw over to you. What have you got for Decant the Week? What's been on your radar that's of significance for people to maybe have a listen to?
Well, maybe we'll start off with significance, or maybe we'll start off with something interesting. But yeah, I'm going to throw something out to you, and I'm just going to write it down here. See whether you guys can pick up what I'm putting down, because there's something called 40.
Make your pen fatter.
I can't on this one, but that says 60-40. If you can't read it,
make
60,
it white.
40.
Make it white. Yep, 60-40. All right, there's a rule. There's a 60-40 rule that you're talking about.
There's a 60-40 rule, and I don't know. We'll figure out some sort of notoriety for this person who gets this right. And I'm going to tiptoe around this throughout the conversation today, and I'm going to come back to it. But if you can guess, and it's a positive thing about the 60-40. There's some great positives, and this goes a little bit to the perfect pairing, but 60-40, what's the relevance to now in the economic cycle, investing globally, domestically? What is really now benefiting? And it's got something to do with 60-40. So we'll come back to it later. But
that's very cryptic, Fenton.
60-40. Well, look, for some of the viewers who have been watching us for a little while, I reckon they might just twig as to what I'm talking about as we go through the content. But one of the major things, mate, I was astounded, but check this out. The scaling back of Canada's second largest pot producer is the second restructuring in less than 12 months. Canapoi cuts 60 of its jobs, citing a thriving black market.
What?
It's unbelievable. Well, we spoke about this a little while ago, and this was a very, very, a trend that was on fire, so to speak. It was really gathering a huge amount of momentum. And we were talking about investing in cannabis and cannabinoid companies. It was over in Canada. Now I actually had one of my team members go over to New York, and they said, I said, could you smell the chestnuts roasting on the edge of the street? At Christmas time, they roast the chestnuts. It's magical around there. And she said, no. I said, what did you smell? She said, pot.
Everywhere.
Well and truly, Jace, we hit the mark. So for many people who actually made some of the investments that we were talking about some time ago, done very, very, very well. What do you reckon? And I'd love it in the chat. Whack it in the chat. What do you reckon the total size in US dollars? What do you reckon the total size of this market is now? And this market, really, the legalized market of this.
The legalized market of the pot cannabis market in Canada.
No, in the world.
World.
Because it's global now. It's in the US, it's in Canada.
It'd have to be trillions, wouldn't it? But,
who remembers Bangkok Hilton here? Whack just a Y in the chat if you remember Bangkok Hilton with, God, what was her name? Nicole Kidman. And it's a movie back in Bangkok. If you used to get busted with a little bit of hooch out there, which apparently in Polish doesn't mean what it does for us. It's very, very different. Only the Polish people will laugh at that. It's quite
look that
disgusting.
up, folks. Hooch in Polish. But anyway, there's a side project for you for later on.
Oh, it's not pretty, I can tell you. We had a dog called Hooch, and I used to chat with Magda's parents about Hooch and time for another day, Jace. For another day,
Fenton. Move on.
What do you reckon the cannabis? So anyway, these guys have done a second structure because to kind of cater for the market. CEO was quoted as saying that the industry is going to pot. But if we have a look at the total market cap, $15 billion. Now that far accelerate, $15 billion. $15 billion.
With a B.
With a B.
$1 billion. Crikey.
These companies are everywhere now. And my point to Thailand is you used to get shot. If you got caught with drugs in Thailand, pot being one of them, you used to get shot. Now, Thailand is now starting to become one of the epicenters of this new legalizations. Why? Because they can capture an incredible market. They can tax that market as well.
Money tax, mate. I tell you now. Yep.
If you're going to be doing it, you may as well be taxed on it. And that's pretty much the slogan of every single government around the world. So, mate, they're trying to get a good head on things in the company.
Bump. I don't have a bump.
we kind of need a bad joke thing, don't we? We've got that one.
We do. Where's the laughs?
Well, plenty more of those dad jokes to come. So, ladies and gentlemen, I don't think this industry is going to pot. I think that this is going to go high and high and higher over time as it
and the hits just keep on rolling,
more normalized. So let's talk about, and there's a lot which we've interest rates, Reserve Bank rises, raising the cash rate, that is, interest rate rises, then as the flow-on effect. It's a big topic, huge topic, but there's so many layers to this, and hopefully we can do it justice today to talk about it, because there's going to be people, sure, it's just the wine tonight. Nobody, well, it wouldn't be legal yet to be to doing that unless you had a doctor's certificate. It's amazing how many teenagers have doctor's certificates over in the US. It's incredible. Well, one of the things, let's have a little bit of a pop at the journalists. Jay, shall we have a little bit of a pop at the journalists?
It's absolutely. We should do that.
A sub-headline, rate shock.
Rate shock.
Raise your hands in your household. Be that person. If you were shocked they were going to do that today, on Tuesday. Nobody was shocked.
No, everyone knew it was coming, mate.
Everyone knew it was coming. So the big question is, for how long, and what's the data behind it? And we went through some data last week, but if we have again, now this is from the Reserve Bank of Australia this time, directly from the horse's mouth, so to speak. We've got the actual inflation. Then we've got, because inflation, ladies and gentlemen, is the cost of things going up. Cost of our consumables going up. Gas, electricity, milk, the full box and dice. All right. Now, we've been talking about it being transitory because we don't think that it's going to continue. And there's multiple reasons that we're going to go through as to why that is. And inflation going up means the Reserve Bank raises interest rates in order to be able to stop people from buying this stuff. So they make you pay more for your mortgage and things like that, and it puts the brakes on the economy, which reduces.
Yeah, you won't spend any more on petrol or electricity because you don't need it, or food.
No. Jeez, I tell you what, you can't gamble anymore, could you? Because the money that you would have dropped on the roulette table just went straight into the gas tank to get there. Unbelievable. But as we can see here, this is straight from the RBA as well, right? So we can see January 2022 in here. So that's where we are, right? In January 2022. This is January 2024. Right, so that hasn't happened yet for those of you who aren't smoking some of the good stuff. That is in the future. So the expectation is the very, very sharp rise, and we're seeing commentary come from the Reserve Bank basically saying that we believe that inflation has already started to peak. Right, there's maybe a little bit more to come, but it'll peak, and there is a delayed effect to interest rates.
Yeah, I mean, inflation happens, and then what is it? Usually 1 to 2 to 3 months later when they react.
Can be 3 to 6 months later for the data to come through.
Yeah,
because we feel it as soon as the interest rates go up. We feel it. We're paying more out of our pocket, and we're cutting back. We're spending less, but the data doesn't come through to the Reserve Bank until 3 months later, effectively, when all of this information starts to come through. And then they've got maybe the next quarter to do something about it. So it really is sort of a 6-month cycle, even though they meet every month, right? But if you really want to look at it, 3 months behind the 8 ball, 3 months to get in front of it. Now, if we apply that logic, right, and we're already the second month of the year, they already think that it's starting to taper. Well, if it's already starting to taper, it means that the end of that is very, very near. The end, in theory, has already happened, Jason. It's a little bit of a totality.
Well, that's it. It's like, it's already done, but the momentum of things is just dribbling or pushing it along a little, right?
Yeah, 100%. So given the fact that we know that it's already done, why not just ramp it up a little bit more and inflict a bit more pain? So that's what's going to happen. We're going to have an extra couple of interest rate hikes, and that's definitely on the cards. One of the areas of concern in and around this, and so if you've got mortgages and you're looking at property investing and things of that nature, you're running companies or you're looking at the stock market, in some ways this is actually a good thing, because if we have a look at this wage price index growth, so we've got again actual in black, which you can see here since 2020 started to grow. Now this has already happened, this part here. We can see that the expectation is that it's actually trimming, and it's looking like it's heading in a little bit of a downward direction. Now, not a great position to be as an employee necessarily, although you are protected as employees in this country. You've got the ability, if your wage to decrease, other than you're decreasing your hours when you're in a stable job, is fairly limited. There's laws around that, but that's curbing. Now, if that's curbing, Jace, and cost of living is going up, money in our pockets on a weekly basis is going down, there are two major headwinds that stop the Reserve Bank from pushing up rates anymore.
Yep.
And so in a lot of ways, when we start to look at this, we can actually see, well, there's actually some signs that are coming, that it's going to be some easing potentially, but we've got to be able to see the next 6 months out, because they will likely hold position. They're not going to just immediately start to backtrack. Would they do that? Have they ever done that before? Well, the answer is absolutely 100% yes, they have.
Yes, they have.
So this is a pragmatic graph of the cash rate over time. So you can see that they very rarely make rash decisions and then retreat from their positions. or you might assume that they do that reasonably frequently. And it's not uncommon around the world. The beautiful part is that we're kind of all going about this together.
Together.
When we look at this,
And Andy, I think you're right. They overshoot on purpose because they know they can reduce quicker than the other way around. Maybe, like at the end of the day, and the common thing is it's a blunt instrument, right? It's a hammer.
Yep.
Smashing a needle. That all they've got is a hammer. That's it. Yep. It's not a scalpel. It's a hammer.
And there's some benefits to this, which we'll go into a little bit later on when we talk about the perfect pairing. But I guess the theme from that, Jason, and the reason why I wanted to bring this back up again is, yes, we've gone through a rate rise. Was it expected? 100% expected. Were you guys already expected if you were watching? Yes, you were. You already knew what you were doing about it. You were starting to play 6 months down the track, play where the puck is going to be, as Gretzky would say. And in doing that, you're already better off, right? Yep. You've already saved some reserves for this. You're already kicking in. From a property perspective, you're looking at increasing your rental yields. From an investor in the market perspective, you're looking at, okay, well, interest rates start to come back off, markets start to rise a little bit, and trends start to revert. But I'll go back to it and I'll say, what is one of the benefits that is arising out of this interest rate increase?
I'll tell you one right now. I can tell you one that I'm quite enjoying. My income from my properties is accelerating, and it hasn't done that for 10 years. My rent has gone up 30 to 40% in happy days, winner, chicken dinner. Indeed. So, that's one of the benefits for me and many property investors. Rent's up. That's absolutely right. And you know what? Those benefits, Andy, I've said this with the crew, those benefits are here to stay. Right. Let me ask you this, Andy. If you put your rents up $100 and interest rates go down in 2024, right, will you reduce your interest rates to match that? Will you put them down, Andy, being a nice...
Put the rents down, you mean? No.
Yeah. No, you won't. So this is what a lot of people this is what a lot of people don't get in this space, certainly for the real estate world. Once the rent's up, happy days, but there was no pressure across the whole market for almost a decade to put rents up, okay? And now we're like, holy shit, let's get it up there. Let's get the rents up because we know the interest rates will adjust a bit, not back down to those record lows for a long time, if ever. But we know they'll stay up there, and that kind of, decent interest rate will then continue, to push rents, ever so slowly upwards like normal. But for 10 years, it went sideways, and in COVID went down, So we've made ground. I'm happy with that. Most property investors should be happy with that. And it's going to take sort of 2 years to roll through the cycle. This is what I was saying to many people. It's like, you haven't even seen it yet, because we've only had 8 months or 9 months of interest rate rises, Andy, and no one took them seriously for the first 2 or 3. So we're only 6 months in, folks. Don't miss this. We're only 6 months in to the cost of that money being passed on to renters. And one thing that we all need to realize, renters don't have any cap on what they can use to pay the rent, Andy. Mortgage holders have caps on what they can pay for a mortgage, but renters could pay 50%, 60%, 80% of their income, and by and large, don't hang me for this one, but by and large, no one cares how much you're paying for your rent as a percentage of your income, right? Other than the Greens, and they care for the wrong reason. There's no cap on that. There's no restriction, Andy. With mortgages, there's a restriction. There's legislation, all that sort of shit. But rents, no. We're only 6 months in. We've got 1 to 2 years of cost and rents going up into the future. Still coming, folks. Still coming. So anyway, there you go.
Well, mate, there was one of these that I thought I'd throw across to you because I was I was almost late for today's session because
You were on time, and then I forgot to change the bloody the heading.
but I got slightly distracted. So this one I thought was really interesting because I was reading through the RBA statistics and I haven't prepped you for this one, but check this one out. And I'm a bit shocked. Oh, hang on, wrong one. Sorry, team. Oh yeah, that's the one. I was a little bit shocked. Check out this little sucker right here. I'm looking at the one on the bottom right.
Press play again so we can see or make it full screen or something.
Yeah, just bringing it up there, Jace. I haven't done this one before, but can we see this one? The private.
Oh yeah, the approvals. Yep.
Hey, talk us through this one because surely this should be going the opposite direction.
As in going down. Well, here's one I prepared earlier, Andy.
You're getting out of town, really?
Let me have a look at this for you. All right. So, let's have a look at approvals and supply, right? So in the world of, the world of property and our supply chain, if we have a look at the rolling approvals over the last long time, we actually had our mojo on for a little while in this section here. All right. We had our mojo on come sort of 2014 to 2016 across the country. We're actually delivering properties at a reasonable amount, right? At a reasonable amount. But here's the question. Here's the underlying question right now. This is the question I want you to sort of answer. Like, get this one, folks. Get this. So let's go back to 2012, a decade ago. And maybe you could quickly do the research or just have a guess. In 2013, what was our population, Andy? Our population. Do you want to have a guess in Australia?
19 million, 20 million, something like that.
Let's just call it 20 million, right? 20 million. Yeah. Anyone like Andy, rough guess, population today?
25.
It's 20. It's closer to 27 million. Julie's saying 18. So if you look at this, right? If you look at this from a increase point of view, it's 26 million. I think it's closer to 27 million now, right? Especially with all those students coming back. Have a look at this number, right? So in essence, from this point, we had a little up, but we've had down. But the population has continued to grow with immigration and other things. So the gap between supply, Andy, is just going bigger and bigger and bigger and bigger and bigger. Like, it's not keeping up. The challenge is when you look into these supply chain issues, the only way we can actually possibly even get close to supplying the market need for real estate in Australia is multi-density, right? So, which is apartments and townhouses, okay? Like, that's the only way we can get close. It's just not possible. It's not going to happen, folks, that, everyone gets a 400, 500 square meter block to build their house on. That's over. Get over yourself. It's dead. It's gone, right?
What about backyard cricket? What are they going to, is it going to be living room cricket? Is that?
Well, no, Andy, it's virtual cricket. You get on you get on your iPhone and you play the cricket. Yes. Well, I mean, sad, mate. You and me used to go to backyard cricket, but that's not the future. Unfortunately, for most Aussies, it's medium density housing or high density housing. It's the only way we can supply enough housing to this marketplace. And the challenge is right now, and if you can see the underlying stuff here. See the black bars? The black bars are houses, and this is where we had a construction boom, where we had, annoying. That's right, Jules. This is where we had a construction boom, and why? Why did we have a construction boom, folks? Tell me in the chat. Is that because of underlying demand and financial capacity of a of a bunch of buyers who were just sitting on the fence waiting for things to happen. What happened, Andy? The biggest beep ever in Australia's history. What was it? What was it? Anyone know? Andy, what do you think? What happened then?
Mate, I'm going to go back to one of the biggest stock market rallies that you've ever seen globally. And one of the things that ultimately, depending on where you look back, the
Boom.
main mechanism that funded that was leverage.
Mate, here we go. Yep. All right. Fenton's on it. He said, right, what we had low leverage. We had leverage, which was the easiest ever in Australia's history, lowest interest rates ever, and the highest government incentive handouts ever in history, folks. Ever in history. So here's the drill. And so the lowest cost of cash, like lending ever, the highest giveaways ever, and it had a temporary little spike. Now, let's face it, that's not providing any supply to the real market for the future, Andy. All that did was take a bunch of people out of the rental pool who were going to buy anyway, but they jumped in and temporarily created some dwellings. Now, they're not going to add to the supply chain in any way, shape, or form, folks. That's not going to the rental pool or whatever. And unfortunately, when we go back to reality is that is the direction of supply into the future, Andy, because approvals do not mean actual real supply, by the way, just so we know, because it takes quite a long time. So if we look at the same time, Andy, the same time frame, if we look at right now, where are we, kind of Q1, what actually happened to the actual supply construction, the blue one, blue and green, what actually happened to the actual constructed supply to the market? It went down. And what's this little blip here? That little blip is this little blip here. All right. So 2 years ago, it's going to show up 2 years later. Folks, yes. It takes 2 years later for it to happen. And then what happens? Shits itself. Like, telling you.
And that's technical chart language, ladies and gentlemen.
So supply, there is approvals, Andy. And there is starts and there is completions. And they have this kind of cycle that will, the cycle of an approval to a completion is anywhere from 2 to 4 years long. And the average failure rate of approval to completion in our system is around 30%. Right?
Yeah. Oh, mate, I've dealt with council a few times.
Yeah. Yeah. Anyway, and Andy, you've got to now, not only have you got to now get the approval, which is hard as buggery anyway, you've now got to fund it. The financiers have got to say, well, have you got any pre-sales, Fenton? Who's buying it? Well, the interest rates are going up. Bob, who used to be able to afford 700, now can only afford 600. Well, your whole development is priced out of the market. 6 months ago, you were in the money, and now, Andy, you're out of the money. Like, it's gone. It's over. Like 80% of your buyers are now not able to buy the property that you put your deal together for 6 months ago, right? Yes. So I think, here's my prediction. I've said this a few times, team. It's going to be 4 to 5 years before this even gets close to getting kind of heading in the right direction. 7 to 10 years before it could possibly even rectify itself back to the days of kind of, 13, 14, 15, where supply was actually good. The only reason we supplied, what's the number one reason? Give me this. Anyone know this? What was the number one reason we actually were able to supply the market for the first time in 30 years, actually what you would consider an oversupply, which wasn't, like just enough supply? What was the number one reason, Andy, we could actually supply the market in Australia? Now, think about outside of Australia, what was coming to Australia. I'm giving you a tip here, folks. Put it in the chat if you want to. All right.
Well, mate, migration was significant. There was a mining resources boom.
Yes, yes. But what did that attract? What did that bring to Australia?
Money, people.
Money and people. And where did that money come from? The majority of money that entered Australia in that phase, kind of after the GFC, there was a door wide open.
It was China. The floodgates opened to China.
Boom. Yeah.
There was a large. India was sort of the unscripted in the media.
China. China. It was a gates wide open. China flooded Australia with cash, and we actually were able to develop enough properties to build in Australia. Then somebody somewhere, the number one menace, said, "Oh, this is crazy. I'm losing votes because China's buying Australia." And Aaron's on it. Look, like everyone's on it. Like we saw this. China put money into Australia. Lots of students, lots of immigration. Now, I'm not saying right, wrong, or indifferent, folks. I'm just telling you the facts. You cannot develop enough properties in Australia without enough money, because the banks in Australia are conservative turds. They're good time Charlies. They'll lend you money when you don't need it and want it back when you do need it. What do they call it? What do they'll sell you a umbrella when the sun's out and want it back when it's raining, right?
I was just thinking there's like 10 politically and racially incorrect vernaculars that we're about to go down there. I was thinking, oh no, he's going to say one of them. But you navigated that well, Witten. Congratulations.
Yeah, all right. Well,
funnily enough,
that's what happened. And then someone in politics, Andy, said, "Oh, we don't want that anymore." And then basically hundreds of billions of investment dollars disappeared from the Australian development landscape. All right. So that's what happened. Anyway.
And there was I think it was qualified international investment scheme, QQ. I can't remember, mate. I used to run China tours over in 2008, and taking people to Shanghai, Guangzhou, looking at what was going to be the super cycle of real estate. Funnily enough, I was talking about real estate back then, but it was Chinese based on the growth story. And so they had this qualified international. Somebody might know this if they've been involved in it, but it was literally a government scheme that allowed people to invest offshore. For those of you who don't understand the China market, there's H shares, which are China stocks that are traded in Hong Kong, which the global market can access. There's A shares, which most people cannot access. There's B shares, which are more broadly accessible by the globe for trading. Hong Kong's probably the most reliable, but those people in China were restricted to A shares, right? So they really could only invest within their own country. They couldn't invest abroad. And so when you had a population of 1 billion, albeit though in the most recent census, they said that they might have overestimated their population by 500 million people. So they lost 500 million people. You put that into context, it's Australia times 20, and they just disappeared. But maybe that for another time, Jace. But
keep going. I've got a comment on that. Yeah,
they were finally able to invest offshore, and there were certain parameters that were put around it. But this saw one of the greatest influxes of cash into Australia that we've ever seen, and it wasn't for any purpose of buying commodities or any of the natural GDP trade of Australia. It was just an unrivaled, growth boom of cash flooding into Australia. And it was incredible to be in financial markets at that time, because one of the things that dictates where our dollar sits relative to other dollars, one is interest rates, right? So if we have higher interest rates and we've got good risk weighting, most people want to invest in Australia.
People want to put money here. We're a stable economy, Andy. We're one of the
And
top 3 banking economies in the world that people trust.
AAA until Dan got into Victoria. Now we're only double A. Thanks, Dan. Pandemic, longest lockdown in history in the world. Record. Anyway, I won't go on about it. I was in it, ladies and gentlemen. So I'm one of the persecuted. But long story short, Jace, is that it was unrivaled, and there are these things that you would look at for the future, and you'd start to go, well, these things are going to happen again. It doesn't happen exactly the same way, but as we always talk about in this show, history doesn't repeat itself, but it's an incredible mimic. And so there's a couple of things that I'm taking from what you're saying, Jace, but one of the things I'll throw back over the fence then is, what is the ramification from your perspective? Because, Jace, when I looked at this, and I looked at this not from the perspective of, well, I know you, so I started looking at it, but I was expecting, see this spike, because this is private residential building approvals.
Yeah. So that includes like renovations, Fenton. So that includes things like, I'm going to put a shed out the back, and it includes doing a renovation. You know, it's very misleading numbers.
So how is this not going in the opposite direction? Because you would be thinking that it's going to go like that in order to be able to accommodate for the fact that we've got 0.5% rental vacancies. We've got 1% rental vacancies. We've got 1% more people who will be in Melbourne in the next 4 weeks.
Oof, mate, tell you.
And when you say we've got if you were saying, Jace, we've got a 1% rental vacancy in Victoria or Melbourne, if they do land here, that's it. There's a zero.
There's nothing to rent, mate. I'm telling you. Like, and when we see it now in our property management business, like where are these people? And you know, there's this fake government promise. You know, here's our aspiration to add 1 million homes over the next 5 years through a government initiative. What a bunch of bullshit. They can't even bloody, you know, get some solar panels right, let alone fucking build a whole building. I mean, seriously. I mean, gee, I tell you what, you know, no, they're turkeys. To be quite frank, it's interesting. The other night we had a guest speaker, Andrew Wilson, very respected. We love him as a property commentator, and he was saying, "Listen, folks, I think it's pretty close, 5 to 10 years away, and the average Aussie will be like, you know, a lot of Europe, where the price of a property, it's so Ocker, isn't it? It's so Aussie, yeah, Alison. Love it. Very the price of a property is going to be out of the average person's reach, right, Andy? So it's on its way, folks. It's pretty close. And Andy, this is the interesting thing, and I'll chuck up some of the stuff that I had in my conversation here just quickly. You know, the idea that you know, all right, that, you know, interest rates going up always affects property prices and they're going to go down. Well, you know, that's not the case, team. That's not the case, folks. Check this out. I'll show you something right now. Okay, here's what happened. You know, this is kind of July 22, you know, and then we started to sort of slow down a little bit. This is the aggregated, the whole country asking price, Andy, of houses when it came to the some data, right? So what happened in when did the interest rates start going up, Andy?
Oh, it's a good question. 6 months ago.
Yeah, late 22, yeah?
Ballpark, yeah. I mean, it was so recent, but it's been so rapid. What is it, nine in a row? 9 in a row? 8, 9 in a row. So 9 months ago.
So 9 months ago, let's call it June or July it started, right?
Yep.
So we had a high. So the aggregated asking price, Andy. So this is kind of a leading metric, all right? So just get this. The aggregated asking price for every single property listed online for sale, reached a high of 814 in June 22. Markets had just risen like crazy September 2020 to, close enough to June, July 22, like $215,000. Like the biggest rise we've seen in a long time, all right? Interest rates come along, 6 to 9 interest rates in a row. Bang, bang, bang. Yep, it affected asking prices of properties, right? It affected it, right? Let's just go. This is the whole market. This is the Australian market. So we find a low. I'm trying to find the lowest part here. The lowest, 798, right? August. Then everyone's kind of like, oh, yeah, not the end of the world, not the end of the world. Check this out. Asking price going up, going up, going up, going up, going up. Like, so why are the average asking price of sales around the country going up in the headwinds of these things? Well, there's no real like massive pressure everywhere for the market. There's not. So asking price now, Andy, you might be a cheeky buyer and you might put an offer in and you go, right, 829, not a chance. I'll give you 780 or whatever. But the confidence of the sellers and the agents are saying, hey, there's nothing to sell. There's nothing to buy. Well, let's just put the price up and see what happens, because there's still more buyers than sellers. There's still more buyers than sellers, right, going on in the marketplace, all right? So, yeah, people need somewhere to live. That's right. It will be like generational rental, right? And so let's have a look at this. Even the auction results come now. Last year in February, we had some pretty crazy good auction results at sort of 80 and, 80% all round. Like, they were kind of beauty. Like that was peak of the market, like from a, that point of view. Well, check these numbers out, Andy. This is not far off the pace when it comes to a few places. Brisbane had a shock up last on the 4th. But 70% is nothing to sneeze at. 70%, when it comes to those auction rates. And so, what's an indicator of the health of the real estate market? Asking prices. And certainly in Melbourne and Sydney, other places don't rely on auctions as much. But, that's not a far gap between, in Melbourne, dude, look at that. That's a 3% gap, right? The most aggressive market we've seen in the last decade, and Melbourne was only 3% away. Now, tell me, folks, how is it going to end up in things like this when it comes to, let's have a look at, these turkeys. Maybe we could do the number one menaces, but anyway, these turkeys going, house prices are gonna drop, and it could lead to, where was this? I was reading this. This is ludicrous. Look at this. An overall fall of 25 to 30%. Oh, you're kidding me. The world's ending. Like, fucking hell. Gee, I tell you what, that's just, this is bullshit. This is bullshit. Complete and absolute rubbish when it comes to the market conversations, right? It's not even close to being accurate when this stuff's working on. So, well, what's going on in those marketplaces? Well, let's just have a look at actually the real facts, the real data, the proper year-to-year data, Andy, when it comes to.
I'm loving that chart up the top left. That's interest rate, that's cash rate versus what? What have we got there? Mortgage rates, cash rates. It gives a few of the kind of like the precursors of,
We had some mining booms. We've had some low inflation. APRA, who caused the worst? So tell me. Anyway, I've probably given this away. But anyway, who caused the worst, the highest average price reduction or valuation reduction in Australia's history? Well, recent history anyway, folks. Andy Fenton.
Yes.
Yes.
I'll have APRA for 5,000, please, Jason.
APRA for 5,000. Lock it in.
Lock it in.
Lock it in, Eddie. Boom. Fucking APRA. Folks, the general market doesn't cause it. Some interest rates going up and down doesn't cause it. Government, dead right, Julie. APRA. Like those pricks getting involved, talking shit about bloody lending policies, which, they let the banks get away with whatever. Oh, my Lord. They caused the biggest average price point adjustment in recent trackable history, which is since 2005. Anyway.
Allegedly,
folks.
These are opinion pieces, ladies and gentlemen. Sorry to all of my friends over in APRA.
We do have a disclaimer at the front and the back of this, so just so you know, listen up, right? But listen, it doesn't take Einstein to work that out, does it? APRA gets involved, and there you go.
Responsible lending, Jason. Responsible lending. We have to have responsible lending in this country. If we don't have responsible lending in this country, we ditched it, didn't we? Sorry, no, we don't. When the chips.
But hang on, responsible lending is really good for the banks, even though they paid some fines. Oh, anyway, what do they call it? The 4-pillar policy, Fenton?
By Peter Costello, and the way that Peter rolled it out really held the Australian economy where it needed to be. But yes, and here's the thing, ladies and gentlemen, we have a bit of a joke, but would you prefer the Greece banking system or the Australian banking system?
No. Oh, I love that. Who are those two comedians? Is they do that interview. So how much does Greece owe? Oh, yeah, $1 trillion. Who do they owe it to? The European economies, and how much does Germany owe? It's like, oh, well, $1 billion or something. And why can't they pay their bill? Well, they lent it to Greece and they can't pay it back.
It goes backwards and forwards. I love that because the markets reacted, I think, about 3 years ago. I think we might have been doing this at the point in time. It was Greece of defaulting on debt, so the market plunges. But hang on, I'll just go back to my history books. I'm pretty sure Greece hasn't actually paid any of its debt for the last decade, and I think it was longer. It's a great system. It's a great system.
Well, listen, Fenton, I've got to go to dinner. I'm getting text from my wife going, listen, it's 5 o'clock, but I think we should do number one menace. We got anything for number one menace?
I certainly do, mate.
All right, after this. What do you got, Fenton?
Well, mate, while everything's going down, who do you think the big winner is? Who do you think who walks away smiling like a good time,
Who's crushing
Charlie?
Who's crushing it, folks?
Crushing it, ladies and gentlemen. Who do you think's crushing it? Well, based on the RBA, the Australian Bureau of Statistics, one of the best companies in the world, it's not in the world, in Australia, is actually Australia. The taxation revenue growth in Australia is absolutely phenomenal. One would say an all-time high, or at least
all-time high, Fenton. Look at the growth in that revenue.
Unbelievable. We're talking about corporate income tax. That's the tax that you and I pay, and all the corporates who do pay tax. By the way, 68%. I think last time I checked, it was roughly the amount that's paid by small to medium business. That's you and I, and a lot of people who are listening. Corporate income tax. Look at the green. Yeah, got flogged over the last few years, and we're getting flogged again. GST, small in there.
Check out household income tax.
That is everyone who's listening
to
this. Yeah. Take a crack at that.
How cheeky is that?
At that. So
number one menace.
Right. Number one menace. Who's kicking the most amount of goals while many people are kicking themselves in the guts going, I should have done this or I should have done that, or how do I pay for energy prices? I still reckon, Jace, hard the amount of politicians. 100% better planet.
I'm with you, Fenton. I'm with you.
Lower taxes for everybody and less fighting. I couldn't
Well, if you halve them,
believe
you
it.
don't have to pay. You don't have to pay as many politicians. Like taxes.
Remember the Wealth, Wine and Wisdom we did probably about 12 months ago, where we had a fair crack and we opened up what the revenue spent per shire of government was.
Yes.
And in many cases, the labor cost per people in government, like the wages, were like 70%, 80% in some of the major municipalities.
Ludicrous.
And so, ladies and gentlemen, who's crushing it? No, none of that. The number one menace, Jesus Christ. Yep, that's it. Wow. While Australia's doing it tough, some aren't.
Some aren't, mate. Collect the money. Well, there you go, Fenton. They never failed to provide us with a little bit of ammunition, and you don't have to look far, unfortunately. In this.
I fell over that. I literally fell over it. I was going to keep it a politician and government-free zone. But, mate,
you've heard this one before, right, Fenton? What's the only profession in Australia where you can have two, not one, folks, but two capital gains tax-free properties? Everyone in Australia can have one. There's only one profession
related to the oldest profession in the world, isn't it? Because I know that prostitution is the oldest profession in the world.
Well, it might be the one after that. Tell me in the chat, folks. This could be the final nail in the coffin for our number one menace. What is the only profession in Australia? There you go. Politicians. Tim is on it. You can have one where you live and one in Canberra. Kidding me? Oh, what? To be honest, maybe we should start a property investors party, and we all be party members, and we all end up with two capital gains tax-free properties.
Well, I mean, it's business. I need to go up to Brisbane a lot to see you guys, so maybe I should get two tax-free places.
I think Jason, so.
I don't want to leave it on a negative. Can we do a quick perfect pairing? Because I'd love to.
Let's do a perfect pairing. Let me give you one little intro. Let's do it. What do you got, Fenton?
Perfect pairing. Well, we went back to the 60-40 concept right from the beginning of the night.
Oh, what's your 60-40? Dun, dun, dun.
Dun, dun, dun. But before I get there, keep you in suspense a little bit longer. You're probably going, I don't care. Well, neither do I. No, I do care. So perfect pairing. We've been talking about interest rates rising, right? But have a look at this. Again, from our friends at the RBA and APRA. Outstanding loans, which means that if you've already got a loan, on average, you're paying 0.5% more. Statistically, across Australia, you're paying 0.5% more than somebody who's getting a new loan. So what's the perfect pairing for this, Jace? For me, loyalty. It always happens. Oh, but I really like place your 3-letter acronym for one of the major banks here. And I'm like, are you fucking serious? Like,
they don't like you, so why should you like them?
You are loyal to a bank. My God. The quick story, I think I said it last week. One email to one of the bank managers of one of my clients the other day. Just said, can you please populate the interest rates on this spreadsheet? Oh, and put the security in there as well. Just want to make sure it's up to date. Oh, like literally 30 minutes later, oh, wait, we've just decreased 3 of your loans by 0.75%. Just notice that they're a little bit out of whack. So what do you do?
What do we do, Fenton? What do we do?
Well, do what we've been doing through the whole of COVID. Shop around. Online shopping. If you're paying a little bit too much, instead of spending money this time, look at saving it. Pick up the phone, threaten to leave. If they don't lower it, you can ask for the retention department. You can do that. You can say, listen, Want a discount on my loan? No? Okay, can you send me through the retentions department because I'm going to figure out what my buyout figure is so I can get rid of my loan and unlock it and see you later. And quite often, like, you can do this. You could say we're going to move banks because it's not sharp enough rates. So we just want to make sure that we know what our payout figure is to give to our broker, and immediately they'll send you through the retentions department, and there's a good chance that they'll give you 25 basis points, maybe even 50. What does that do to the interest rate the rise that just happened? Boom, you've just knocked it out. So
Gets rid of it.
You get rid of it. And
Dead
so
right.
That's one of the perfect pairings for today. Go and don't be loyal. Don't be lazy. Get amongst it. If you need to, reach out to Jace or I through this channel. We're happy to introduce you to anybody to help you out with your loans. That's fine. If you don't know who to ask, we'll give you names of lots of people who can be trusted. But just ask the question, and if they don't come to the party, get advice and get money back in your pocket. And the other,
I mean, listen, Fenton, I'll quickly dovetail on that for you as well. Like the interest rate for a new loan is way better than an existing loan, right? So, like, don't muck around, folks. Don't if you can still qualify, and this is the kind of like the fine print, Fenton.
Yes.
If you can still qualify for the loan that you have, right? If you the loan that you have, then changing lenders in the right way. So don't do it sillily, like end up with, another problem. But, it ranges anywhere from let's call it 5.24 at the moment, maybe 6-ish, down to 4.84, 4.63, that's as of today. That's not any sort of, exact science. This is kind of a Tommy test here. This is kind of my special test, crash test dummy. But, a new loan at the moment has lower interest rates than an existing loan, folks. So call the retention team and say, I'm leaving unless you drop it. And if they don't drop it significantly enough, in and around that kind of, call it 5 to 6%, then you could be better off going somewhere else. So make sure you reach out to the right person. And there's one or two people who said yes. So we'll reach out to you and, make sure, you get it done.
Make sure you don't sit on the wall. What do you call it? Like a wallflower. Get in amongst it. Make sure that you make the right decisions. Get people in your corner. Don't make rash decisions, of course, as Jay said. But there are savings to be made if you just go out there and play the game. And the game doesn't need to take too long. And even if you've got low LVR, which means that your house is worth significantly more than the loan. So let's say you got $1 million property and a $400,000 loan. Well, there's a good chance that with some lenders you're going to get even more of a discount based on the fact that you are a lower risk. And Jason and I were talking about this 2 years ago, which is risk-based interest rates.
It's here, Fenton. You called it, mate. You called it 2 years ago, and it's actually here right now. If your loan-to-value ratio is lower, they will give you a lower LVR. Crazy, but it's here. It's shown up. It's already here without any fanfare, along the way, which is awesome.
The only people I think who are making a fanfare about it are Athena, who come on and say, love us and leave us. And I'm no way affiliated. Let me be very clear about that, and not endorsing them. But that kind of, I reckon that is going to become, especially from mid-tier banks or second-tier banks, I reckon that's going to become very common types of slogans. Come here. If you're low risk, you get a low rate. There you go. There's a headline.
Hey.
Low risk, low rate.
Boom. Boom. Fenton, good work, mate. Well, there you go. Kylie, if you do need some help, reach out to your coach. If you don't have a coach, well, you need one. And Deb, who's behind the scenes, might make sure that you get a connection, Kylie, in one way, shape or form. All right, Fenton, we better call it quits because I've got a dinner to go to. I've got a good friend who's got a 49th birthday.
Wow.
That I've been invited to, that I've got to show up to.
Right. Well, you better get cracking. And, mate, little birdie tells me that you're somewhere in that same sort of sphere. So
it might be about, I don't know, 16 days away. You never know. All right.
Mate, great to hang out with you. Have fun tonight. Ladies and gentlemen,
Mate.
great to have you all here. Really appreciate you spending a night with us, having a glass of wine or whatever it is that you're having behind the scenes. Jace, it's been a good one.
Mate, awesome to hang out with you too. Thanks, Deb. Thanks, folks. And it's a good night from me.
And it's a good night from him. Good night, everyone. Thanks for watching an episode of Wealth, Wine and Wisdom.
Make sure you like, subscribe, and turn on the notifications so you never miss a thing, folks.
We'll look forward to seeing you next time.
Debrief the week with Wealth, Wine and Wisdom.
Every Friday at 5 p.m. Victoria and New South Wales time. We know that Queensland, South Australia, WA have different time zones, as does Darwin, but we're sure that you can do the calculations depending on whether it's daylight savings or not.
You can also catch up on all the episodes wherever you get your podcasts. Make sure you check out the Positive Mentor podcast from our 6-star team at positivementor.com.au.